Before we dive into today's detailed analysis of the EUR pair, it is imperative to share a legal disclaimer. Trading foreign exchange and financial products carries a high level of risk that may not be suitable for all investors. The content of this video is strictly for educational and entertainment purposes and does not constitute financial advice or a direct invitation to trade. Please remember that the market is highly volatile, and you are solely responsible for your investment decisions and risk management. Always trade responsibly and with a clear plan. We start our analysis on the EUR daily chart. As you can see, the chart is completely clean, without any indicators. Today, February 11, 2026, our goal is to identify the key liquidity zones where institutional money moves. To achieve this, we will apply the accumulation, manipulation, and distribution model. Stick around until the end, because this model will reveal the exact price direction on lower timeframes. It is 5:49 a.m. in New York, and we are trading the London session. On the daily chart, we've marked the closest highs and lows. Notice that price has not yet touched the previous day's levels, remaining in a sideways range. This is due to the anticipation of the 8:30 news, non-farm payrolls and the unemployment rate. The market is accumulating orders ahead of this major volatility event. Now we drop down to the 12-hour timeframe to gain precision. In this timeframe, we select and adjust the supply and demand zones closest to the current price. Notice how we've refined the high and low levels, identifying specific points of interest that weren't as obvious on the daily chart. These 12-hour zones will act as magnets for the price. They are the levels where we will look for the first signs of reaction before the market decides its definitive direction ahead of the news. We continue moving down and are now on the 8-hour timeframe. The key point in this view is the appearance of an 8-hour FVG, or fair value gap, which we have outlined with the yellow box. This inefficiency acts as a magnet for price, indicating a zone of imbalance that the market typically seeks to fill. Keep this space in mind, as it will be essential for understanding the EUR's behavior in the coming hours. We now move to the 4-hour timeframe, a key timeframe to refine price behavior with greater precision. Here, we can take a deeper look at how the candles interact with the 8-hour FVG we previously marked and how substructures are being defined. This perspective allows us to fine-tune our zones of interest and detect subtle signs of accumulation that go unnoticed on higher timeframes. It is time to pay close attention to each candle's formation before the New York Open. We remain on the 4-hour timeframe to observe the immediate pivot points. I have marked the closest buy-side and sell-side liquidity to the current price with blue arrows. These zones represent retail stops and are the primary targets that the Interbank algorithm will seek to neutralize. Notice how the price is compressed between these 2 points. A sweep of either of these zones will give us our first real clue regarding the direction the pair will take during the New York session. Dropping down to the 1-hour timeframe, we project the first technical scenario for when the macro event takes place. This path suggests a bearish move aimed at invalidating the marked lows and entering the 8-hour fair value gap. As you can see in the drawing, following the news release, price could seek sell-side liquidity to rebalance the inefficiency left behind on higher timeframes. Notice how previous support zones become logical targets if the market decides to expand lower after the initial manipulation. We remain on the 1-hour timeframe to consider an opposite scenario. In this path, we outline a bullish move that would aggressively break the previous day's high, projecting toward deeper buy-side liquidity levels. It is currently 6 a.m. in New York, and the price remains in a holding pattern. We will not make any premature decisions. Our discipline requires us to wait until the clock strikes 8:30. It will be at that moment, with the release of the official data, that the market will reveal which of these 2 paths it has chosen to take. We drop down to the 15-minute timeframe to witness the exact moment of the news release. Look at the 8:30 candle. Following the release of positive data for the US dollar, the EUR reacts with an aggressive and massive bearish displacement. Within minutes, price invalidates the previous levels and charges toward our zone of interest, sweeping all the sell-side liquidity we had identified. This is a perfect example of how technical and fundamental analysis converge to trigger rapid institutional moves. Price has now fully entered the 8-hour fair value gap, seeking the rebalancing we projected earlier. We remain on the 15-minute timeframe, and we can see that there are only 30 minutes left until the New York session open. Following the bearish expansion, price has left a clear inefficiency, a new 15-minute FVG that we have highlighted on the chart. This gap will be vital for observing potential retracements before the trend continues. Additionally, identify the external liquidity that still remains below the current price, marked as SSL or sell-side liquidity. The combination of this value vacuum and the pending liquidity targets provides us with the roadmap for the start of the American session. We drop down to the 5-minute timeframe and observe a clear sideways formation. Following the initial news move, price has entered a consolidation phase ahead of the New York Open. The candles are respecting the range boundaries, accumulating orders before the next expansion. Don't be fooled by this stagnation, it is the prelude to the American session move. With only 15 minutes left until the open, we drop down to the 3-minute timeframe to identify immediate liquidity. Notice how price is marking clear levels, but pay special attention to the 1.18500 level. This is a round number of high psychological relevance that is currently acting as solid support. The respect shown to this level indicates a battle between buyers and sellers before the real New York volume hits the market and defines whether this support will hold or become just another liquidity target. We return to the 5-minute timeframe to refine our entry. Here, we locate a 5-minute order block that perfectly converges with the previously identified 15-minute FVG. Notice how price is beginning to draw a very clear map. After the initial expansion, the market seeks to mitigate these zones of imbalance. This highlighted area on the chart represents our primary point of interest. It is the place where the institutional footprint is most evident, and where we will look for the necessary confirmation to validate our directional bias. With just 5 minutes left until the New York Open, we are looking at the 3-minute chart. Price has precisely respected the 5-minute order block and remains within the 15-minute FVG. Notice the formation of equal highs and equal lows, which creates built-up liquidity on both sides. The map is set and the zones are validated. We are ready for the institutional volume injection that will define the next expansive move for EURist. On the 1-minute timeframe, we see a sideways formation immediately after the open. Despite being in critical liquidity zones, price is consolidating and accumulating orders. This compression is the signal before the definitive move. We remain patient until the range breaks and confirms the institutional direction. We are on the 1-minute timeframe, and it is approximately 10:04 a.m. in New York. The chart clearly shows the accumulation and manipulation phases, now moving into what appears to be the distribution. However, an operational question arises. Are we seeing the final distribution of the AMD model, or will the price need to sweep more liquidity before breaking through the upper zones? Although the daily low was set at 1.18330, notice how price is struggling to hold above the psychological level of 1.18500. This area is the current battlefield and will determine if the model completes successfully or if we will see one last liquidity sweep. Let's take a brief moment for theoretical reflection by looking at this diagram. The AMD model seems simple when we see it like this: a clear accumulation, a quick manipulation to trap liquidity, and an expansive distribution. However, in real-world trading, scenarios are often much more complex to detect. The market doesn't always move so cleanly, and phases often overlap or present false confirmations that can confuse the trader. Understanding this basic structure is vital, but our mission is to learn how to identify it even when market noise tries to hide it. It is fundamental to understand that the AMD model can manifest in more complex ways, as shown in this image. Here, we see an accumulation that is not a simple rectangle but rather presents oscillations that test a trader's patience. Manipulation can be deeper or more prolonged, and distribution may develop in several stages before reaching the final target. Learning to recognize these variations is what separates a beginner from a professional. The market does not aim to make it easy for us, it seeks liquidity, and sometimes that search requires more sophisticated structures to trap the maximum number of opposing orders. We return to the live chart on a 1-minute timeframe. It is 10:07 a.m. in New York and, as you can see, the AMD model has manifested in a seemingly straightforward way. However, in institutional trading, nothing is as it appears. This clarity could be a trap designed to trigger pending orders at both ends of the accumulation. The algorithm often encourages retail traders to place their entries just before making a sharp move to neutralize that liquidity. Exercising caution at this point is vital. We aren't just looking to see the model, but to understand if the price has the necessary strength to sustain the distribution or if we are facing a new sweep of equal highs. Look closely at what is happening on the 1-minute timeframe. The blue arrows show us the precise price displacement to neutralize liquidity, aggressively sweeping both previous highs and lows. After this double sweep, the market leaves us with a very clear 1-minute order block. Notice how new buy-side liquidity points have been marked. The algorithm is preparing the ground, eliminating retail participants before starting the session's real expansion. Now, pay close attention to this detail on the 1-minute timeframe. We are witnessing the formation of a turtle soup pattern. Notice how the price executes an aggressive manipulation, marked by the blue arrow, momentarily breaking a key support level just to trap impatient sellers. This turtle soup is nothing more than a deep search for liquidity. The algorithm sweeps the stops and triggers sell orders only to sharply reverse the price. It is a high probability signal indicating that the true direction is about to be revealed after clearing weak hands from the market. We remain on the 1-minute timeframe to observe the structure's outcome. After completing the turtle soup pattern, price begins a swift and forceful bullish displacement. Notice how the current candle decisively absorbs the liquidity built up at the BSL or buy-side liquidity levels. This move confirms that the previous manipulation achieved its goal, collecting the necessary fuel to break through resistance. The market is now seeking deeper buy-side liquidity levels, validating our institutional reading of EUR and demonstrating the power of this pattern when combined with a clear demand zone. We remain on the 1-minute timeframe to catch the finest detail of the price delivery. Now, look at the blue arrow pointing to that bearish candle. This move isn't random, as it has just marked a new BSL or buy-side liquidity level. By generating this relative high on a retracement candle, the algorithm is creating a new pool of upper liquidity. For us, this acts like a magnet. The market often leaves these footprints before a final expansion, giving us a clear target for where price will want to head to neutralize pending buy orders. It is now 11:28 a.m. in New York, and we remain on the 1-minute timeframe. Following the accumulation and manipulation phases, price seems to have made the definitive decision to complete its cycle. Notice how the distribution accelerates toward our final target, the upper order block. The market has validated the entire previous narrative, from the liquidity sweep and the turtle soup to the creation of new BSL levels. This is the moment where patience pays off, watching as the algorithm delivers price with surgical precision into the zone of interest we identified since the start of the session. If this detailed analysis of the AMD model and institutional price action on the EUR has added value to your trading, don't forget to subscribe to the channel and hit the like button. Your support is essential for us to continue creating high-level educational content. I invite you to leave a comment with your thoughts or any technical questions you may have. I always personally respond to your inquiries. Finally, if you know someone who could benefit from this tutorial to better understand liquidity and market cycles, please share it. See you in the next video.